Thanks one-to-one for the opportunity to present today. Today I'll be talking about Blackstone Minerals. We are looking to restart the previously operating Ban Phuoc nickel mine in northern Vietnam. And you can see there it was a small nickel concentrator that operated between 2013 and 2016. We're going to restart the mine, but we're also looking to build a downstream refinery that produces chemical products for the lithium-ion battery. So we're looking to build a vertically integrated mining and refining business in northern Vietnam. The mine will produce 50% of the feed into the refinery, and then 50% of the feed will come from imported feedstocks from around the world, and we particularly like Australia and Canada. We've taken some strategic investments in Manitoba and also Western Australia. So the idea is that we would look to feedstock partners and we would bring their concentrates into Vietnam and then upgrade them in our refinery to these chemical products for the lithium-ion battery. These products trade at a significant premium to the underlying metal prices. So what we're looking to produce is called a precursor cathode active material, and it has nickel, cobalt and manganese in the ratio of 8:1:1. And it's a battery-grade chemical product. Quick snapshot, we are listed on the Australian Stock Exchange, also the Frankfurt and the OTCQX. We have a market cap of around $50 million cash at the end of the last quarter was actually $7 million. Listed investments around $10 million. We have a very supportive top 20 shareholder base, some large institutions including Deutsche Balaton out of Germany, Fidelity, Nanja Savetta out of Hong Kong. We also have EcoPro. They are a cathode manufacturer from South Korea. Board and management with 5%. The board and management comprises of a group of geologists and mining engineers. My background's in mining engineering. We recently included Dan Locker. He was the previous MD and CEO of Western Areas, which was a very successful nickel mining company in Western Australia. Was recently taken over by IGO. So Dan brings over 20 or 30 years of nickel mining operating experience, and that's important as we move into the next phase of development. So you can see here, located in the northern Vietnam region to the west of Hanoi, we have the upstream mine, which is the previously operating nickel mine, where over the last 4 years, we've delineated around 500,000 tonnes of nickel at about 0.4% nickel. So to put that in perspective, it's very similar grade to the Mount Keith nickel mine in Western Australia, which has been a very successful nickel mine for BHP and previously Western Mining. So we're looking at a large-scale nickel disseminated open pit mine with a low strip ratio of around 3:1. We also have some small high-grade underground mines, and most importantly, we're connected to the hydropower grid system in northern Vietnam. The downstream is where we're looking to convert the concentrate into this PCAM NCM 811 product. We're looking to bring in third-party feed for 50% of that. So it's as I said, a vertically integrated mining and refining business, and it's using that renewable power base that we have in northern Vietnam. We are looking at a partnership model. We are looking to sell down up to 50% of the project. And the idea is we'll bring in downstream partners from the lithium-ion battery or car manufacturing industries. So looking to sell down that 50%. And the idea is that we'll bring in technology partners, but also funding partners that are linked to the offtake. And these groups are in high demand for the NCM 811 product. And what really sets us apart from our peers is this ability to produce a green product. So we're looking at a low carbon product, which is much lower CO2 footprint than our peers, and particularly a much better focus and higher ESG compliance than our peers in Indonesia. One of the benefits of operating in Vietnam is this low operating cost environment. So the power is around 7 cents per kilowatt hour. The labour cost is very competitive. It's actually lower than the cost of operating in China. So that's driving a very low C1 cash cost. So you can see we will sit in the lowest quartile. And most importantly, we will be a lower operating cost than our Indonesian peers. So you can see a lot of the peers in Indonesia much higher operating costs, and that's driven by the fact that they're mining nickel laterite. So one of the benefits of having nickel sulphide is that you have a much lower operating cost because you can use flotation, which removes 90 to 95% of the waste rock will go to the tailings, and then you're only downstream processing around 5% of the ore body. The other benefit of having sulphide is this ability to produce a low CO2 footprint product. So you can see there our Indonesian peers have CO2 footprints 2 to 6 times higher than our product. So we've done some work with a group called Minviro. This is a life cycle analysis of our greenhouse gas emissions. We will have one of the lowest CO2 footprints in the industry. That has been verified by the Nickel Institute. We're not happy being one of the lowest in the industry. We want to be net zero. So you can see we have a pathway towards net zero, and we think we can achieve that from day one. So we've got a number of initiatives there that can push us towards net zero, particularly the power purchase agreement. So if we can lock in a direct power purchase agreement, we've recently signed an MOU with a wind farm which we'll be setting up near the mine. That would push us towards net zero. The other big mover is the ability to bring in third-party feed with lower CO2 footprint. So this, our initial numbers were based on Australian nickel concentrates. If we're able to bring nickel concentrates from Manitoba, for example, which is 100% hydro, then we can push that CO2 footprint even lower. So you can see here we have a district. It's a nickel sulphide district, very similar geology to Jinchuan and Norilsk. It's a magmatic nickel sulphide system, a number of high-grade massive sulphides outcropping at surface, but it's the disseminated sulphides which we're most interested in because we want large-scale, long mine life opportunities. And so we've delineated one large ore body called Ban Phuc. That'll give us a 10-year mine life with that low strip ratio of around 3 to 1. The mine will produce around 18,000 tonnes per annum of nickel, and that'll be through a 6 to 8 million tonne per annum concentrator. Unfortunately, the existing mine is too small for this large disseminated sulphide ore body which we've discovered. So the existing mine was set up for small, high-grade underground mining. We do have some small high-grade underground mines, but our focus is going to be this large open pit, like I said, very similar to the Mount Keith nickel mine in Western Australia. So once we have the concentrate, so the concentrate is very a conventional crush grind flotation. Once we produce concentrate, we then take that to our refinery where we work through a pressure oxidation process. Pressure oxidation combined with solvent extraction. So these are tried and tested technologies used all throughout the mining industry since the 1960s. So there's nothing novel about this flow sheet. This is the first time as an industry that we've produced chemical products for nickel. So we've taken existing technologies, we've brought them together, we've got a blank canvas, and we've got an opportunity to produce a chemical product in the most efficient way and with the lowest CO2 footprint, and that's what we've achieved with this flow sheet. We've done over 12 months of piloting on this flow sheet, so we're confident we're now at a position where we can move this into production. One of the benefits of this flow sheet is the ability to bring in MHP as an intermediate product. So MHP is a product that is becoming more abundant. It's a product from the nickel laterites. If that has a lower CO2 footprint or a high enough ESG compliance, we can bring MHP in halfway through this flow sheet. So there's a number of byproducts. Copper is a byproduct, so we produce a copper cathode. We have leach residues which will have platinum group metals, so we are looking at further leaching to produce the platinum group metals. The most important product being nickel sulphate and cobalt sulphate. We combine those with the manganese sulphate to produce the NCM 811 product. And as I said, those products, this product trades a significant premium to the underlying metal prices of the nickel, cobalt, and the manganese. So this process is very flexible on feedstock. So one of the benefits of the pressure oxidation hydromet process is we can take nickel concentrates that are potentially not suitable for the smelter industry. So a lot of the industry is set up for smelting and for the stainless steel market. So high arsenic and high MgO concentrates are considered deleterious elements for the smelters. What we've got, the benefit of the hydromet process is we can take those high MgO, high arsenic concentrates, which trade at a discount because of those deleterious elements. The other benefit is we can bring in that MHP, which is the nickel laterite product, nickel matte, or black mass. The black mass being the recycled product from the lithium-ion battery. These products all trade at different payabilities, and we can arbitrage the difference between these different products at different times in the market. For example, mixed hydroxide precipitate at the moment trades at a bit of a discount to nickel concentrate, but it wasn't that long ago where MHP traded at a premium to nickel concentrate. So we can arbitrage the different payabilities in the market for these different products. So just in summary of what we've achieved since acquiring the mine, we've drilled over 100,000 metres of diamond drilling. We've moved from scoping study to pre-feasibility study. We're now at the completion of the definitive feasibility study. We've done a 12-month pilot plant. So in a 4-year period, we've gone from an exploration asset and all the way through to a definitive feasibility study. The next phase is about the partnership funding. So we're now moving into a competitive process to bring in a downstream partner, and we're looking to sell down 50%. We'll then look to debt process, which will be linked to that partnership. So whoever those partners will be, we'll then look at government-backed development bank, export credit agency debt, which will be linked to those partners. Then we move into the development phase. We've recently been given an opportunity to move into the rare earths in Vietnam. So we've been approached by a number of local parties that would like to move into rare earth mining. They approached us because of our expertise in mining, metallurgy and geology. This is a really exciting opportunity. Some of the best rare earths in the world exist in Vietnam. They haven't been exploited yet, and that's because the government has not been open to moving these mines into production. What we see now is the Vietnam government is opening up rare earth mining. Because we've been operating in Vietnam for 4 years, we are at the front of the line as with respect to the auction process that will allow us to potentially move into the rare earth space. So this is a new opportunity which has come to us because of I suppose years of operating we have in Vietnam. So in summary, we have a vertically integrated mining and refining business based in northern Vietnam, using that abundant hydroelectric power. We have a globally relevant nickel sulphide district. It's a large-scale magmatic nickel sulphide. We think that it will deliver more than the 10 years that we currently have ahead of us. We'll have a first quartile cost position with the lowest carbon footprint in the industry. And that's really been driven by that hydromet process combined with the renewable power and the fact that we've got sulphide nickel. We are looking at a partnership model. This is a large mega project. It has an NPV in the order of nearly $3 billion. The CapEx is not light. So that is why we're bringing in some of the big partners. These players have sunk billions of dollars into Indonesia. We see Vietnam as a great alternative to Indonesia because it's a much cleaner, greener product. It's a lower cost operating environment, and we're confident that we will bring in those partners over the coming months to de-risk this project and move it into production. I'd like to thank everybody.